All right, good morning and welcome to followmetrades.com Saturday scanning session, looking for great trades. I'm Dean Jenkins, founder of followmetrades.com, and I'm excited to be here this morning. You know, the market has been a lot of fun this year. That's one way to put it, right? It's been exciting. A lot of volatility, and for the prepared trader, that can present some real opportunities. And Jim says he's interested in GDX. Let me make a note of that one. We'll get to analyzing your ideas here a little bit later in the presentation. So let's talk about finding trades. Okay, there's over 6,000 publicly traded companies, publicly listed companies in the United States. Some thousands of ETFs, right? That makes a big pile of hay. And finding a great trade candidate can be like a needle in a haystack. So we try to make that a little bit easier. Try to use some tools and some approaches, right? So we're going to try and find a few needles in the haystack. I'll show you how I do it. I'll share the trades that I find. And at the end, I run a stock and option pick service. That's the core of followmetrades.com. So at the end, I'll make an offer if you like, how I'm the trades I'm finding, how I approach the whole thing. Maybe you'd want to follow along with us in the subscription service. And hey, Shiv's here. Good morning, Shiv. And I see Tim from Marysville. Awesome. All right. Hey, a quick disclaimer. I'm a trader. I'm not a financial advisor. I'm not giving financial advice. All trading and investing involves risk, and risk control must be used at all times. Right? You guys all know that, right? So many of you are existing customers and you just tuned in, see what kind of trades we find. I'm glad to have you here. Some of the customers have been with me several years and we've developed a great relationship. Some of you are brand new, you don't know who I am. So I am Dean Jenkins, and a bit of a bio there. And I'll just flip the camera on for a minute. And thanks for being here. Again, I'm Dean Jenkins, founder of followmetrades.com. And I'm calling in here from Olympia, Washington, just south of Seattle in the great Pacific Northwest. And I'm looking forward to this today. I'll turn the camera off so that it's not a distraction. And Robert says Intel reminds him, oldie but goodie. Yeah. So, I've been trading and investing for over 25 years, coming up on 30 years now. It really started when I worked for Intel Corp. They gave us stock options and employee purchase, and that was a really good run. I started working at Intel in '93, and it split and doubled several times. And all of a sudden, I was like, hey, this stock thing's cool, right? I have an MBA from the University of Washington. I started off doing fundamental trading and analysis. It was just frustrating. Got mixed results. You can see here, I totally gave up on the market for a while in 2007. Total good luck. I was sitting out on cash during the 08 crash, 08, 09. But I couldn't stay out. The market's interesting and cool, and I like it. So I got back in and, started trading again, and got in some winning trades, like Bank of America and British Petroleum and stuff. And they actually went, really nice into profit. But I was stressed out because I didn't know how to manage it. What do you do? What do you do? Should you take your profit now and not give it away, but are you leaving money on the table? So I really got interested in technical trading in about 2010, which is about 12 years ago now. Made a lot of mistakes. About 2012, I settled on my current trading system. And in 2015, I launched followmetrades.com. Between 2012 and 15, I was working with good friend and mentor, Bennett McDowell of traderscoach.com. And give him a lot of credit for helping me get on the track here to be a successful trader. But that's me. And I know you guys have been on lots of webinars where there's some kind of promise and some kind of hook, and then it takes a half an hour to get to the meat. I'm going to get to the meat here really quick. I'm not going to do that to you. But I did want to introduce myself. And here's my website, followmetrades.com. And who cares about my bio? Why should you pay attention? So, it all comes down to results. And I've got several years of results listed on the website. You can go check it out. But there's all kinds of claims out there on the internet and ads and stuff about how, oh, we're going to sell you a course for $5,000 and you're going to turn 10 grand into $1 million in 6 months. You guys know that's crazy. That doesn't happen. A few people get lucky. Most of them get absolutely burned. That's gambling, right? We're doing trading here. We're trying to do it in a really disciplined way. So you can see 2021 year to date, we've closed 17 trades. And it's funny, we've actually won 8, lost 9. So we're just under a 50% win rate. But that's not the key statistic. The key statistic is your payout ratio. What's the size of your average winner to your average loser, right? And my tagline, if you would, is keep your winners big, losers small. And we're doing that. The winners are about 3 times the size, 2.9 to 1 for the winners are 3 times bigger than the losers. So we're actually in solid profit for the year. You can see for the year, we're at 7.34% profit. So on pace, right? Wrapping up the second month of the year, to have a pretty good year. And you contrast that to the S&P 500, which is, had a couple strong days last week or the end of this week. It's still down 8% year to date. So I'm actually, over 15% ahead of the S&P 500. So I feel pretty good about that. All right. What are we going to do here? A little housekeeping. I'm going to explain the trade setups I'm looking for. I'm going to walk through some scanning techniques. Then I'm going to try to find some great trade candidates, and they're out there. And even in this volatile market, there's some longs, there's some shorts, there's some good ones, right? And then I'll be happy to analyze any of the trades you're interested in and see, maybe there'd be a good one there. Quite often I get trade ideas in a setting just like this where, the participants would go, hey, what do you think of XYZ? And I look at it, well, I like it a lot. Okay, I'm a technical trader. I am not a fundamental trader. And I know Henry was typing in the chat before, hey, what do you think about, some various, very narrow sectors, like, autonomous driving and stuff like that. I think they're really cool, right? But ultimately, I'm going to be basing my decisions on whether or not to take a trade on the chart. And I'll show you what I'm looking for in a chart setup, right? So, news and ideas about sectors and stuff, they can draw my attention to particular sectors or to particular instruments. But ultimately, I'm going to look at the chart and qualify the trade or disqualify it. Because I'm a technical trader, and I have come to, I do believe, and I've proven that the technical analysis really matters, right? And so does fundamental. Fundamental data absolutely matters about a company, but it's the market's response to the fundamental data that you can see on a chart, right? So we'll see. And Bill's asking, what do you think of Fedex? I think it was Abdul asked about that one as well. So we'll look at that chart. Okay. So again, I'm going to be scanning for some trades here, and then we're going to summarize them. And then at the end, if you want to follow along, I'll give you an opportunity to do that. Rick says, LYV. You guys are going to keep me busy here. All right. All right. So, what am I looking for in a trade, right? Here's some of my favorite quotes. Secret to success is to be ready for your opportunity when it comes, right? You got to know what you're looking for, and you got to have a plan, right? And Louis Pasteur, in the field of observation, chance favors the prepared mind, right? And to be successful in trading, here's what I've learned, right? You gotta have a plan. You gotta have setups that you're looking for. What are the you gotta have great trade setups. You gotta have an edge in the market, right? A greater than 50% probability, right? And you want a high probability outcome, and you want a great reward to risk ratio. Then you got to use risk management. You got to keep the winners big, losers small. Some trades are going to lose, right? We can't hit 100% here. At least I haven't figured it out. I haven't seen anyone else who has, right? So the reality is we're going to lose some trades. So when they do lose, we want to control that. We want to keep it super small, right, and manageable. And then once you're in a trade, you also have to manage it, not just the risk management. When do I exit the trade? When do I take profit, right? How long do I stay in it? You got to have you got to have a system and a set of rules for doing this. And so I do, and I'm going to share them with you. All right. And yeah, I'm going to share this recording later, assuming the technology all works. It takes a couple hours to get it all rendered and ready to go, and then we'll send it out to everybody registered. All right. I use some key tools here I use Dow theory, which really is, it's just a proven trend. I look to make sure a trend, if something's headed up, is that really a proven trend, right? Of higher highs, higher lows, higher lows in an uptrend, lower lows, lower highs, lower lows, lower highs in a downtrend. I use Ichimoku Cloud, which is really just a different and kind of sophisticated way of using moving averages. I like to see price get above it. That confirms a trend, and it also shows us some key support and resistance areas. And I use a very simple, repeatable version of Elliott wave, where I'm simply looking, an impulsive wave, a corrective wave, or a continuation of the original trend, right? My overriding criteria here, right? I use these things all together, and I go, hey, do we have a trend, and do we have a, using Elliott wave and Fibonacci levels, do we have a target that makes sense, right? High probability outcome in the trade, and a good reward to risk ratio, so that if I'm right, it can make a lot of money. Yeah, you'll see Ichimoku Cloud on the on the chart there, V Durga. Okay. Here's some diagrams that show, hey, Dow theory, higher, lower, high for down, right? You don't really have an uptrend until you get 3 data points: high, higher, low, new high. Just because something went up once doesn't mean a trend has started. So we look for confirmation: a downtrend, low, lower, high, new low. Here's Ichimoku Cloud, right? This shaded area is what we're really concerned with. These lines, which are called Kaijun and Tenkan, are fast and slow lines. They are used to create the lines, right? These are derivatives of that. And the classic Ichimoku Cloud says, hey, when price is above the cloud, you get a fast over slow cross. That's a good long. And when the other happens, when the price goes below the cloud, you get a cross, fast under slow. It's a good short, right? It's a trend confirmation. So I don't even show these lines anymore because it's axiomatic. If price goes above the cloud, right, these lines have crossed. They have to, right? I use a very simple version of Elliott wave. We're just looking for big impulsive move, a correction, which is called wave 4, or a continuation of that original trend, right? I don't get into all these, if you do all the permutations and some of the way people interpret Elliott wave, right, it'll just spin your head. I don't do that. We're just looking for, hey, what's going on? What's the big picture on a chart? Is it in a big trend? Is it corrected? And after a correction, is it going to continue in the original trend? You got to manage risk, right? You got to be determined how much you're willing to lose on a trade. And my approach is to, look at a chart, I find a support or resistance level, I draw a line, I go, okay, that's the point I would exit. And then I determine, hey, how much am I willing to lose? And for me, it's never more than 2% of the account, typically 1%. So if you got a $50,000 account, 1% of that, 2% is 1,000, 1% of that's $500. So you use 1% and you go, okay, here's my exit point on a chart, and I'm only willing to lose no more than $500, right? Then you calculate your position size. This is my exit point. If it goes from the entry point to that, how many shares, how many contracts would equal a $500 loss? And then that's the number of, that's the position size I take. It's different than some people trade a fixed trade size or get out at a fixed drawdown, right? I like to link that to the reality on the chart, right? You got to manage your trades. You got to take profit at the right time. You can add to the position strategically. You got to stay with winners to let them be big, and you got to exit the trade at the right time, right? And you see, I trail my stop. During a trend, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. I move, my initial stop, then a new low is put in, trail it, trail it, trail it, trail it. And some people, when I say stop, they go, oh, that implies a, stop loss or a market order. And, I don't like that because the market makers are hunting my stops. I'm talking about a predetermined exit point, however you want to execute that, right? It's just important to go, hey, if price goes down to this level and the trend has failed, this is where I'm going to exit. I'm going to take a small loss and move on to the next trade. All right. Let's go ahead and look. I'm going to walk through these steps, right? Here's how we scan, right? We do it. First, I just do a big picture, what's going on? What is the big picture in the market? I create what I call a thesis, and then I narrow a big list down to a manageable list. Then I start looking at charts, applying my setup, right? Try to find some stuff. Okay. So what's the big picture right now? Well, first, let's look at the S&P 500 daily chart. Just, S&P 500 is, this is the one. This is the one in. There's lots of indexes. There's the Dow, there's the NASDAQ, there's the Russell, right? S&P 500, is the biggest index, and I like the others for sure, but this is the main central index, right? It's 500 biggest companies in the U.S. All right, so what do we just look at the S&P 500, where we know we had a really big rally. It's been going on for quite some time, and recently, hey, we've had a pretty good correction. In fact, we got down into correction territory, below a 10% drawdown from the all-time highs, right? We got this low, lower high, new low. Last 2 days were really strong rallies, right? On Thursday, the market opened down sharply on the, the Russian invasion news, and really came back strong. And then Friday came back strong again. But you can see here's the Ichimoku Cloud. It's red, right? We're in a downtrend. And this is a 200-day moving average. We're below that. This is a 50-day moving average. We're well below that. So this is officially still in a correction. It is not over. And Robert is agreeing with me. The SPY is the market barometer, best for measuring probabilities of the whole market. I agree, right? If you're trading different sectors, there's different indexes that make sense. Yeah, okay, and Shiv's jumping in there with his comments on risk management. Absolutely. And Shiv's an existing customer. He's been with me for a number of years, and he's a really, really successful trader. So when Shiv types something in there, when Shiv talks, people listen. They should. All right. So the S&P 500 is official, still in a correction, even though it had 2 strong days. And when we look at a Fibonacci retracement level, right? Most corrections, once they really get going, correct into these blue lines. This is a Fibonacci retracement level, right? So we got a ways to go on the S&P 500. You can see I got a momentum indicator, and you can see we got negative momentum. We're below the cloud. We're below all the moving averages, and we got a target down here. Now that does not mean Monday morning it's going to be going down, right? This is a daily chart, and news breaks and the market reacts, but the expected overall trend is down right now. That's just the reality on the chart. And you can even there's a cool tool you can use here. Trend line. Right now we've got a very clear downtrend. Right? You can kind of take a mean through these highs. Those were some gap outliers. Let's just take a mean through all that stuff, right about like that, right? That's kind of the expected slope of the down move, and it would imply that, early next week we should see a reversal and maybe start heading back down again. These are probabilities; these are not certainties, right? But that's what we have in front of us. So that's part of my big picture thesis: is that hey, the S&P 500 is in a correction and in a downtrend, right? That's just a reality, all right? So what's the rest of my big picture thesis right now? Well, the indexes are in correction territory, right? We got a lot of geopolitical stuff going on, with the Russian situation in Ukraine. This correction on the S&P 500 actually began before things heated up with Russia. And what was the boogeyman then? Well, it was inflation, and it was what the Fed's going to do about inflation, right? And the Fed's been pretty clear they're going to raise interest rates, and it's really the only tool they have in terms of inflation, right? They got some policy stuff and some banking stuff, but they're the big knob they can turn is inflation, is interest rates. So those are hanging out there still, right? Earnings so far in this cycle have been pretty strong, but you can see some companies, but when they come in with any hint of weakness, right, they get absolutely hammered. Remember Facebook and a couple other notable big companies, right? And volatility is high. We have big swings in the market. The price bars, the average size of the price bars are bigger now than they were, at pretty much at any time last year, right? So we have higher volatility in terms of big swings, right? So my conclusion is, individual stocks And what I'm really going to look for, the S&P 500, quite a few stocks and ETFs have a high degree of correlation. If you look at a chart of the S&P 500 like this one, and then you go look at a chart of what's a good index, a good ETF, XLI. It looks nearly identical, right? It's nearly identical. There's a high degree of correlation. So what I'm not really interested, I'm actually trading the S&P 500 right now. I've sent an alert out to the subscribers, and we're short that thing. We got some really nice profit on the shorting the S&P 500, but I'm interested right now in finding trades that don't have a high degree of correlation to the S&P 500. There's some great long candidates probably, and some great short candidates maybe that have farther to go, right? Or are just starting their correction, and they're, the S&P 500's correction is pretty well developed. It's got room to go, but maybe there's something that's just getting started, right? It's just turning from a bull trend to a bearish trend. So I'm looking for individual stuff, right? Shorter term plays, because of the volatility market. I'm taking profit a little bit faster than I normally do, because things can turn on you, right? Tight trade management. We just need to be nimble, take profits early. And, again, a larger correction on the indexes is probable at this time. All right. So let's find some trades, man. Here's the scan I'm going to use today. And I have about 4 or 5 different approaches to go scan. Sometimes I'll look at the sectors and see where the strength and weakness is. And then some of the sector, like the SPDR funds, they list all the companies, right? Each of the ETFs has 25, 30 companies. You can just go, walk through those. Go, I'm interested in energy or technology or, consumer defensive, right? Today, what I'm doing is I'm just going to scan the entire market, all US listed securities and ETFs. Wow, right? So that initial scan is about 11,000 symbols. And what I did was I just wrote a scan here in TradeStation. It's a platform I'm using. I also use Thinkorswim, right? And I'll show you the scan. So hopefully you can see that text is kind of small. So my first criteria was, I said, I want the stock to be greater than $2. I don't mind low cost stocks, but I'm not really interested in penny stocks, right? So, okay, I want the price greater than $2. I want the 10-day average volume to be greater than 1 million shares. I only want to trade things that are highly liquid, right? Because I really like trading options. Well, you shouldn't trade thinly traded stocks. You can get burned, right? Seems like it's easy to get in. It can be very hard to get out at a good price. The bid-ask spreads on thinly traded things are terrible usually. So I want a highly liquid, 1 million shares a day. I want a market cap of $1 billion, right? So we're looking for real companies, right? Serious players, right? And then I've written a unique indicator, which is just how many bars since it crossed the 200-day moving average, right? And I want that to be less than 3. I want something new. And what I'm saying is, I think the 200-day moving average, I know the 200-day moving average is one of the most popular indicators used by traders who trade on daily charts, for stocks and ETFs, right? Everybody's looking at it. So when the price crosses the 200-day moving average, that typically means something new is happening. And so I want it to have crossed within a few days. And then I want the price to be pretty close to it, because I don't want it to have gapped away 20%, right? I'm not chasing that, right? So I want something that crossed the 200-day moving average and it's still fairly close to it, man. Yeah. So this is a custom indicator I wrote, and when my customers sign up, if they want that, I offer that for free. All right. So I just ran this scan. It takes, several minutes to run because it's going through 11,000 symbols. So I ran it beforehand, and it came up with a list of on this scan, 63 symbols out of 11,000 that met that criteria. first pass, it's just looking for, price and volume and market cap. And then it goes and runs the indicators. And you can see I've got that here. So right here, it says, is it above the 200-day moving average, simple moving average? How far from it? And how long ago did it cross that? Now I've also got the Ichimoku Cloud. And so what I can do is if I'm looking for a long trade, right, I want it to be above the 200-day moving average and above the Ichimoku Cloud. So I just quickly in this table look and go, oh, that's up, that's up. And when you see a conflict, right, like here, price is below the moving average, but above the cloud. Well, that's kind of a conflict, right? And then I also go, I can sort this on the Ichimoku Cloud and go, which one's just broke? Oh, look, ZS, right? It's below the moving average. It's a new below the cloud, but it's 18% away. That tells me it had a big gap, so I'm not interested in that one, right? New below, second one here, ZTO. So this one's interesting. So I have this linked, TradeStation, you can link a table, radar screen to a chart. You can see this blue thing. So if I click on this, ZTO is going to come up on a chart. Here it is. Okay. Now, I've looked at 10,000 charts since I've been doing this and teaching other people. And, I have a very specific set of criteria that I'm looking for. And, within about 2 seconds, I can tell you ZTO does not meet my criteria, right? And that's because it's moving at random, right? It's moving at absolutely at random. Now, the one interesting thing about this chart is that these moves from high to lows are compressing into a wedge. So when price breaks out of this wedge, it typically will have momentum and continue in that way. Yeah, you're right. The momentum's coming out of it. So this is just not a great trade point. It's kind of chaotic, right? It came up in the scan because it crossed the 200-day moving average and it crossed down under the Ichimoku Cloud. So it was worth having a peek, but not interested. We got a new uptrend here in ACC. It's above the moving average. It's about 5% away. Let's look at this one. Okay, so this one's interesting. And this is a very orderly chart. It's not chaotic like ZTO was. And I said, I have a very specific thing I'm looking for. And that uptrend was going on forever, wasn't it? So I'm going to analyze that uptrend. If you're going to analyze a trend, you got to know where it began. Okay. And that trend, the absolute low, this is where the trend began. And I'm going to do a Fibonacci retracement from here to the top. In Elliott wave parlance, that is a wave 1, 2, and I'm going to measure from wave 2. Yeah. Those are the rules. It's very simple. Okay. And now you can see how far it retraced. It really didn't get into the retracement zone because what I'm looking for is after this big trend, was there a full-on correction? And the answer is no, it was pretty shallow, right? We had a low, lower high, it did not go lower. So that was a pretty shallow. So because there hasn't been a correction after this, like what, 2 year and a half to 2 year uptrend, we haven't had a correction yet. So I'm not going to chase this up. This thing could die at the last high. They had a couple big days. Maybe they announced earnings or who knows. I'm not familiar with this. American campus, apparently something to do with colleges. Okay, so I'm not interested in that one. Let's do a different sort. Let's sort based on stuff that is super close. And Shiv says it's a REIT. Yeah, so something to do with college real estate. Yeah, Robert, and the whole market had a couple big days. Fair point. So let's just sort this way. What? And I'm going to go fast. I went a little bit slow to explain what I'm looking for. At this point, we want to find trades. So I'm just going to go yay or nay. Maybe that actually is sort of interesting. And the nice thing is I don't have to worry about volume, market cap, liquidity, any of that kind of stuff because I've already filtered it out. I'll measure it and show you. I know that retracement was awesome. That correction happened right into the zone. And now we've got an extension target. Okay. So this big correction happened right into the retracement zone. And now do we have a continuation of that original trend? Now that the correction's over, we have a big, strong high, higher low, right down to the 50-day moving average, good support. And now it has just crossed. Now, we have a high, higher low. We don't have a new high. So in terms of Dow theory, we don't have it, but the Ichimoku Cloud's green, we're above there. So that's worth watching, right? And we'd want to see it really get a good solid close, a good price bar above the 200-day. But that one's worth, DXC, that's worth keeping an eye on. So make a note of that one. A little quick spreadsheet here. All right. Alaska Air Group. So Robert's saying, I'm looking for fresher good trends, the better, or just shallow pullbacks. You know, ultimately, I want high probability and high reward to risk. There's a high probability that, you know, the move that I'm predicting will happen, and that it will happen with a big enough move to be worth taking the trade, right? That we'll get a big win out of it. Right? I use all the indicators together, right? The Elliott wave, the Dow, right? All the tools that I'm explaining here. I use no one tool is going to go, this is the trade, right? I'm looking at, you know, what do they all together say this is a high probability? They're all in agreement that some newer thing is happening, right? That gives me an edge. And this looks very similar to the last chart. This is Alaska Air. And so this is interesting. Had the big move, big impulsive, you know, trend there. That's all we call it, wave 3. Well, wave 4 right into the correction zone. Perfect. We got a nice target up here. Now we've had high, higher low, high, higher low, high, higher low. So that trend is confirmed, and we now are above here. So this one's even better than the last one, and it actually is looking pretty good. So ALK long, wave 5. And Bill says, hey, since your overall market's bearish, your outlook's bearish, why not look for bearish trades? We will. But, you know, a handful of my customers are here, and they can attest that this year, we've made at least half, maybe better than half of our profit on long trades as the S&P 500 was correcting hard. Right, and I know Shiv, you're here, right? And a couple others, Henry. You know, like we made some nice, we got a nice win on a biotech called BCRX, Discovery, some other stuff. We took longs. So the opportunities are there, even though the market is correct. And some of it is just individual company news, and some of it is flight to quality. Lee saying, did I create the Ichimoku column screens? No, this is the trade station. You can add Ichimoku Cloud to the radar screen. Now I'm using custom settings, right? I don't use the factory default settings in terms of the time periods and stuff. I'll show you how you can get those settings if you're interested. Robert says, anyone know if TradeStation is free? It is not. I like the radar screen and scanning capabilities here better than Thinkorswim. There's some things about TOS that I like better, but the scanning and the radar screen here for TradeStation are better. I think you know, do a minimal funding in TradeStation and then, you know, get access to the platform, but I don't think you can just go get it for free. All right. Clack. Short. Below the cloud. Just crossed one day ago. It's really close, but it's there. That sounds good. Okay, so this is the beginning of a correction. You can see it is lagging the S&P 500, so the correlation is not as high, and that's good. I said I didn't want to be highly correlated to the S&P 500. So there's the expected retracement zone, and you know it's really happening, right? We got a low, lower high, low. The cloud has turned red. We are below the cloud. Those are all bearish signs. The momentum is negative. Right now, it had a big day Thursday, Friday, like everything else. That doesn't mean this correction is over, right? We look at what were the critical support areas before? What's right here, right in the middle of the retracement zone. So we would establish that as a target, and then we got to figure out, okay, you know, our entry, if we take this thing, it's going to be around here somewhere. We're not going to take it if it heads up. I'll use this light blue line. That would be my entry. That would be my target. Now, where is the logical stop? What's that prior resistance? And in this case, we could put the stop here, right at the top of this candle bar. And again, my stop would be an exit point. It doesn't imply that you have to have a stop loss market order in there. All right. So what I now look at is the ratio. The distance from my entry to my stop is risk. If I enter here and it goes up here on a short trade, I'm going to exit here. I'm going to take a loss. My reward is if I enter here, it goes down to here, this is how much I'm going to make. And I look at the ratio of those two, and you can see it's almost 2 to 1, almost 2 to 1. So that's good. That's okay. You know, I'd rather it be 4 to 1, but that's pretty good. And who is it? Robert saying, hey, that's expensive, right? Things trading for 357 bucks a share. It's true, right? It depends on your account size and whether you're trading shares or contracts. Expensive except for a spread. Yeah, you can do spreads. I'm not a huge fan of spreads. If I were to do it, you know, it's like, I really want to get in this trade. And, you know, my approach to trading these directional trades is, you know, if it's going up, I'm going to go buy calls, in the money calls. And if it's going down, I'm going to buy in the money puts. And you're like, wow, really? Absolutely. Yeah. In the money, high delta with 60 to 90 days expiration on the contract. That's what I like to do. And that's where most of the money's at, right? Credit spreads, I do not like. The reward to risk on them is terrible, right? If you really want to get into a higher priced stock and you just couldn't, you know, the rules didn't allow you to spend, you know, 3 or 4 grand per contract, you know, on this one, which is probably what it's going to be. A debit spread is okay. You know, that's okay. It's not my favorite, but I could make that work. And question, you know, hey, I never heard of some of these companies. What's your opinion about never heard of stocks? It's all about the chart, man. And remember, I've already filtered out price, volume, market cap, right? Now, before I take a trade, I'm going to go look, who is Clack and what do they do, right? What sector are they in? When are they going to announce earnings? You know, just any red flags. You know, I'm not going to go pour over their financials or any of that stuff, right? But I do want to know what sector it's in. You know, am I doubling up? Is that exactly the same trade as one of my other ones? Well, I don't want to do that. Double the risk, right? So I go background them just a little bit to know, you know, what sector it is, who are they, when's earnings coming, any disruptions coming, right? Other than that, some of the best trades have been companies we never heard of. Right? So that doesn't bother me a bit because it's been pre-qualified. Right? So that's a decent short. Let's put that on the list. All right. Yeah, we're pushing here on time because I just wanted to explain these things. You guys had some good questions. Let me look at some of the symbols that folks asked about. And if you got a symbol you would like to have analyzed, type it in. I'll do 5 to 10 of them, right? Typically, there's 100 requests, and I just can't do that, obviously. Right. So just type it into the chat box. But the ones that came in already are Fedex. And the big question was, hey, Fedex fell out of the sky. Is that as far as it's going? Should we start to get long on this thing? And what's the big picture on Fedex? You can see I step out 18 months to 24 months to go. I just want the big picture. What is the big picture on Fedex, right? Huge run up back in 20, kind of channeled, put in some new highs, pretty good correction. We're still in the correction, right? Has the trend, the correction, this downtrend, is it turned positive yet? No. Had a couple big days, right? But in terms of the rules, the definition of a trend change to the upside, right? We have a low, a new low in the correction. We got 2 price bars up. We don't have a high, higher low, new high. We're well below the cloud. We're well below the moving averages, right? And by the way, you see these blue lines have already done the retracement zone from here to here. Here's the midpoint. So it's too far into the retracement to chase it down, and it's too early to try and take it up. So you got to let that develop. So there's just no trade, and that's okay because there's 11,000 symbols, right? So I don't have to fixate on how am I going to trade FedEx? How am I going to trade Apple, right? I just go find a good trade, right? Baba, somebody asked about Baba. I've become a little leery, to be honest, of Chinese stocks, and that's not a ethnocentric issue. It's that the Chinese government has introduced some chaos and some unpredictability with their rule changes, and it's caused some gapping and some problems. So I'm getting a little skeptical of that. All right. Big picture on Baba, you see, for a while it was a hero, right? Big move up to 320 bucks. And now it has just been in total steady decline. Same thing, right? After this big move down, we can expect, some kind of a correction to the upside. This is now the impulsive dominant trend down, but that move down is bigger than the move up. But it's still putting in new lows, right? Even on Thursday, that was a new low. So there's no evidence of this turning up yet. 1 or 2 price bars is not a trend. We look for high, higher low, new high, getting above the cloud, getting above the 50. That would make it interesting. So it's nowhere close to that. Gdx Gold Miners. Gold's been doing well. So you can see this breakout, big long downtrend. Broke out once before, but it is, we talked about a couple others where there was no evidence, no proof, no definition of a trend change. Well, we have it here, right? We have a high, higher low, high, higher low, high. So this is looking pretty good. It's above the 200-day moving average. The cloud is green. Price is above the cloud. It's above the 50. This is pretty good. It's above a prior high. We got another prior high coming up. So there's not really a good Elliott wave presentation, but just if we analyze this trend, you can say, well, arbitrarily, it's not arbitrary, or, it's real. Here's the prior high, significant resistance levels. Let's set that as a target. Let's, hey, we would be entering, somewhere close to Friday's close. And where would the logical stop be? Well, probably about this last low, right? So this is a 3-to-1 reward to risk. So that's actually interesting. So GDX long. And we've been looking at it. We're in a trading room in the morning. We've been looking at gold and GDX. So that's not brand new. We'll call that 3 new trend, right? LYV, I think, was the one. Yeah, big long uptrend. a nice trend. It's had some volatility recently. It used to be pretty predictable. Now it's wow, 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 wow. Because it's been going up and putting in fresh highs for coming up on 2 years. That's a very mature trend. I don't like to chase a mature trend like that. Right? I'm looking for something new. So that one, that's just where I'm at on that. Let's see. Microsoft. Microsoft is in a correction, is it not? The rules for a correction are met. Low, lower, high, low, lower, high, low, lower, high. Big day like everybody else. Clouds red. Prices below right at the 200, below the 50. Momentum's negative. So that actually could be a decent short. And price target right there, right in the middle, about 241. Microsoft could be a decent short. John, DAC. So the volume's a little thin. 389 was the volume traded on Friday. So for me, that's a little thin. It is in wave 5. Big 3 up, perfect 4 correction, 5 well underway. The target for that ultimately up above 116.95. Pretty good. Found support on the cloud, taken off. That's a good one. But for me, the volume's too light. Dave, I'll do 2 years. Okay, I just want to give an opportunity and want to wrap the presentation up. VET, that Vermilion Energy. All right. How long has this uptrend been going on? 2 years. Right. Price is over 4x, 400%. It's just too late. It's too late in the trend for me. Right. At some point, it would every big trend like this eventually corrects. Right. We don't know when that will be. We know when it's confirmed to start, like when we looked at Microsoft. Right. Once it starts, right here, low, lower, high, low, lower, high. Bam, about here, we could definitively say the correction is beginning. Right. We don't know when that's going to be on VET, but we know what will happen. And so I don't want to get long and then go, oh, that's when it happened. Right. UAN. The same thing. Same thing. That wasn't big enough to be a wave 4 correction. So this is all still impulsive. All right, Bill, Google. Oh, GOGL, which is not Google. Gold Notion. Oh, you said GOOGL. Actually, Gold Notion we looked at in the trading room. GOOGL. Yeah, speaking of expensive. So it's a little chaotic right now, right? We had the big uptrend, we had a low, but then we had a high. And now we have a new low. All right. So I would not try to I wouldn't go long, right? The cloud's red, prices below the cloud, prices below both moving averages, momentum's to the downside, right? Those are all down, 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 down indicators, right? It's hitting the 200. Let's see if it reverses and starts down. And I wouldn't short it till it took out this low, because this low has kind of been invalidated by this move, right? So I would let it get below here. And it's okay. You can wait that out, because if it's going to correct, we got a target down here. Plenty of room. All right, Bill. And Shiv would like to look at SQ square. Talk about falling out of favor. All right. So the trend is obviously down. It was up, a lot of volatility, and then it was down. Right. Now we've had a gap up on Friday. They must have announced earnings. It gapped up 26%. That's a pretty big move. You know, I would guess that that was an earnings announcement and that it was good news. Yeah, Shiv says they beat the estimates. Okay. Let that develop a little bit. You can day trade these gaps, but trying to, swing trade these on daily charts, let that develop. These gaps, and there's a gap here, you can see it, and we'll use our drawing tool. Right. These gaps can quite often be support areas now. The price would maybe pull back to it, but not go down through it because, again, we're doing technical analysis, which acknowledges fundamental data, right? New fundamental data came out and the market responded to it. New earnings data. And they said, wow, we think this company is now worth this much, right? Some back and forth, see if it finds support in this gap and then reverses and puts in new highs. At that point, that could be an uptrend. And you look at the rest of the indicators and see if they agree. So it could be interesting. It's worth watching. I wouldn't trade it yet. All right. Well, hey, we came up with some good ideas, and I kept them on a spreadsheet here. And we're going to look at those at the open on Monday. If they make sense. And in addition to those, in our trading room, we maintain an ongoing watch list. I'll give you a quick view of that. We run a live trading room Monday through Thursday, half an hour after the market open. We're there for half an hour to 45 minutes. And we're just doing this. We're just looking for trade ideas. We're managing our open trades, answering questions, looking at things that the traders are interested in. So here's our watch list. Right, we got some long candidates, some short candidates, and we're bottom fishing, right, for some stuff that may be coming up. We got price targets and triggers and all that kind of stuff on our watch list. So we're going to add some of these ones we found today to our watch list. Right. Steve says, what service includes the trading room? One I'm going to explain to you now. Okay, remember, finding a great trade can be hard. It's like a needle in a haystack. I think we narrowed it down, found a few good ones there that may have some real potential. Remember, you got to have great trade setups with good reward to risk. You got to manage risk. You got to manage the trade once you're in it, right? You guys believe that, right? If you have these things, that can help you become a profitable trader. Be hard to disagree with, I think. How many of you excited about some of those trades we just looked at? Maybe a little unsure. Maybe you feel like that guy. Wow, that was a lot of information really fast, right? So here's an offer to related to what we've been talking about. And I said, up front that we would offer a way to for you to subscribe and follow along, right? Right. I have a stock and option pick service, right? And let's just jump to it, right? The list price on that thing is $127 a month or $1,500 a year. I'm going to offer you a discount on it where you can try it for 30 days for $37, and then it would be $97 a month after that trial, which is a 25% discount from the list price. And there's a 100% money back guarantee on that. A refund on request, no questions asked. Right. And let me post the link to that in the chat box. So what's included in the service, right? With the service, you get the watch list. I just showed you potential trades we found, alerts, email, and the message in our app that we've got for phones. When I'm getting into a new trade, you get the exact details of the trade, entry, stop, target. I take all these trades in my own account with my own money, right? We're there together. You get the exact details. Most of them can be traded either with shares or with options. It's your choice. I provide the contract, and we have a tool for you to help you do the risk management for shares or for options. You get alerts when we're going to make a change, move, take profit, close the trade. You get access to the live trading room Monday through Thursday, 30 minutes after the open. You can attend if you like. It's not required. You're going to get the alerts on the trades no matter what, right? But some people like to participate in the room, and we do record it, and we do a short recap as well. So if you can't make it, you can still find out what's going on that way. We have a live chat session midweek in the evening. You are offered a one-on-one consultation with me. When you subscribe, you get a link to my calendar and you can book time, get off to a good start. I provide some tools and some simple training for risk management, option trading. That's all comes when you subscribe. You get a link to some training material, some videos, some guides, some spreadsheets to help you with that. Ongoing support and training. I get feedback that people really appreciate the level of customer support that we provide. And there's more. Before I get to more, Lorenzo says, how many trades per week can you expect? Average is about 2 to 3 trades per week. And we're in them an average of between 2 and 6 weeks. Those are the stats, right? Over the course of a year, we typically take around 100 to 120 trades. That's a very manageable pace. Other people ask, how much time would you expect to spend? If you enjoy participating in the trading room, then that's going to be, 4 times 30 minutes, right? A couple hours. If that's not your thing and you just want to get the alerts, put the trades on, right? And then make adjustments when there's future alerts for taking profit closing trades, right? You can do that whole thing in less than an hour a week, easily. Right? And like I said, all the trades are based on the chart, the underlying chart. That's where all the probability and moves and stops and targets are determined based on the underlying chart. Once you have a high probability trade, you go, wow, that looks like it's going up, right? Then there's a choice. How am I going to trade that? Right? I provide the information. You can trade it by just going long the shares, or by doing it with an option, which, for a long trade, I'm going to go buy a call option in the money, right? And I give you the contract that I'm going to trade with. So your choice can be traded either way. What brokerage do I use? I use I have TradeStation, I have Thinkorswim, and I use Charles Schwab, right? So the broker, as long as you got a good, high quality, low cost broker that can execute your trades, that's super. If you want to get into chart analysis, and TradeStation and Thinkorswim are the two that I recommend for charting. But in terms of just executing orders, any high quality, low cost broker is fine. Some people are using, the new Tastyworks. Some are using Robinhood. Some are using Thinkorswim, TD Ameritrade. Some are using Schwab. That doesn't matter. All right. Hey, Robert. Well, thank you. You can see Robert's comment. He said he likes my enthusiasm. All right. Hey, but wait, there's more, right? There's a bonus for signing up, for showing up today, right? I have a course on using the Ichimoku Cloud. You can notice, if you've ever seen Ichimoku Cloud on a chart, you'll see it does not look like this. I have proprietary and unique settings. And in TradeStation, you can apply them. In Thinkorswim, you cannot apply them. But I have a custom Ichimoku Cloud study that I include. Okay. You can download it, import it, use it on Thinkorswim. Right. I have this whole course, right? How to use Ichimoku Cloud, how it works, my approach to it, my settings, my indicator, right? List price on my website is $247. You can get it today for free if you take the 30-day trial for my stock and option picks. And here again is that link. That that bonus offer is only good until we hang up. So if you're interested, it's like, hey, it's $37, man, with a money back guarantee. Because if it's not for you, it's not, I don't, if it's not a good fit, let's just acknowledge that and move on, right? Most people, find it to be really good. Some people go, yeah, it just didn't really fit my, my trading style, my beliefs, right? Not a problem. Let me know, give you your $37 back if you want. And, no hard feelings, right? Most people find it pretty valuable, right? So it's 37 bucks, and then it's 97 a month. And if you sign up during the session here, you get the bonus of the Ichimoku Cloud course. And Robert, what I said about Ichimoku Cloud and Thinkorswim is the standard indicator that comes with Thinkorswim. You cannot apply my proprietary setting. So I created a unique Ichimoku Cloud study for Thinkorswim that I will give you, and it will work to apply my settings. Yeah, if you asked it, I probably fumbled it, so somebody else probably had that question too. And hey, that's it. We found some decent trades. If you'd like to follow along, if you like what we got going on here, love to have you be part of it. We have a good time in the trading room. You know, Robert said he liked enthusiasm. If you think I'm enthusiastic, you ought to wait till you meet Eva, who co-moderates the trading room with me. And she's not over the top weird. She just, you know, she really enjoys analyzing charts and trading as well. So we have a good time, and several long-term customers who sometimes co-moderate with us and chime in there and offer trade ideas. So it's really a good deal. All right, Bill just joined. Awesome, Bill. Well, we'll see you Monday. You know, you'll be getting some welcome material in your inbox. Be sure and check that out. All right. All right, hey, thank you so much, right? It's Saturday morning, we just spent an hour here. You know, like most of you like me, right? Hey, Saturday's a valuable day. It's a day off, right? And so you know, I'm just honored that you would want to come spend that time here. I hope you found it worthwhile. That you know, even if you're not interested in signing up, you picked up some new ideas, maybe some trade ideas, right? But thanks for being here. No matter what you do, man, trade safe. Don't lose a lot of money. You know, keep your winners big, losers small. Use risk management at all times. It's just so critical. Robert, it's hard to make someone find someone that makes trading fun. Yeah, it's interesting you say that. I've just come to more of that realization that you know, we're here to make profit, but most people who go the course with me, you know, long distance, you know, long-term traders, it's because they enjoy it, right? We got to make profit, right? When there's always the potential for profit, and you know, some trades are going to lose, we got to keep that small. But the customers who stick around and are successful, they just enjoy trading, right? And it absolutely can be enjoyable. And you know, if you just trade alone and you don't talk to anybody else, you can get a little weird, right? You know, so it's nice to have some legitimate folks to share ideas with, and you know, to, you know, hey, what do you think of this? What do you think of that? Right? It keeps it you know, legit, right? Otherwise, it's kind of lonely just sitting there at a computer, right, looking at charts. Yeah. All right, Donna, you got your hand up. If you got a question, type it in there. I'll try to hit it. Anybody else? I'm going to stop the recording because we've covered all the meat and the trades and all that stuff.